Inflation, it's a term we hear almost daily, but how many of us truly understand what it means or how it impacts our daily lives today? We're diving deep into the latest Consumer Price Index (CPI) inflation report to unpack what these numbers mean for you, your family, and the economy as a whole. Whether you're someone managing a household budget or an investor trying to stay ahead of the curve, this video will give you all the insights you need. So, grab a cup of coffee, and let us explore the fascinating, and sometimes frustrating, world of inflation. Let us start with the basics. The CPI, or Consumer Price Index, measures the average price changes in a basket of goods and services, and the latest report for month-year shows an inflation rate of 4.2% year-over-year. That's a slight decrease from the 4.6% reported last month, but still significantly higher than the Federal Reserve's target of 2% annual inflation. To put it simply, everyday costs are rising faster than what is considered healthy for the economy. Breaking it down further, food prices jumped by 6.8% compared to last year, with staples like eggs seeing an increase of 10.3%, bread up by 8.5%, and dairy products rising by 7.6%. Meanwhile, energy prices, which include gasoline and electricity, rose by 9.1%. If you've filled up your tank recently, you probably felt the pinch. Gasoline alone spiked by 12.7% year-over-year, although it has dropped slightly from last month's high. Housing costs, which make up around 30% of the CPI index, are a key driver of inflation. Rent prices have climbed by 7.2% compared to last year, marking one of the sharpest increases in recent history. If you're a renter, this means higher monthly payments. For homeowners, mortgage rates have soared to over 7.5% for a 30-year fixed-rate loan, the highest level since 2001. Now let us talk about the impact on wages. While average hourly earnings have increased by 4.5%, when adjusted for inflation, real wages have effectively declined by 0.3%. This means that despite nominal pay raises, many people feel like they're falling behind because their purchasing power is shrinking. Imagine earning more but being able to buy less. That's the harsh reality for many families today. So, what's driving this inflation? The report highlights a mix of factors. For one, supply chain disruptions are still lingering, particularly for goods like electronics and automobiles. The global semiconductor shortage has pushed up car prices, with new vehicle prices rising by 7.1% and used car prices increasing by 4.2%. Additionally, geopolitical tensions have driven up energy and food prices worldwide, especially with the recent volatility in oil markets. But it's not all bad news. Certain categories showed signs of relief. For example, prices for apparel remained relatively stable, with only a 1.2% year-over-year increase, and technology products like laptops and smartphones saw minimal price changes or even slight declines as production stabilized. This highlights how inflation isn't uniform. Some sectors experienced sharper price hikes than others. Let us also touch on the Federal Reserve's role in managing inflation. To combat rising prices, the Fed has raised interest rates aggressively over the past year, with the benchmark rate now standing at 5.25%, 5.5%, the highest since 2007. These rate hikes are designed to slow down borrowing and spending, which, in turn, cools inflation. However, this approach comes with risks. Higher interest rates make loans for homes, cars, and businesses more expensive, potentially slowing economic growth. So, how does this inflation impact you personally? Let us break it down. If you're a household of 4, the average monthly grocery bill has likely increased by $1,500 compared to last year. Filling up your car now costs an extra $30-50 per month, depending on how much you drive. Renters, on average, are paying $120 more per month than they did a year ago. And if you're planning a big purchase, like a home or car, expect higher interest rates to add thousands of dollars in extra costs over the life of your loan. What can you do about it? Start by reassessing your budget. Identify non-essential spending that you can cut back on and prioritize essentials like food and housing. Consider shopping smarter. Look for discounts, buy in bulk, or explore alternative brands to save on groceries. For long-term financial planning, investing in inflation-resistant assets like stocks, real estate, or commodities could be a wise move. Remember, staying informed is your best defense. Reports like the CPI inflation report give you the tools to make better financial decisions. Inflation isn't just about numbers on a report, it's a reality that affects every aspect of our lives. The latest CPI numbers paint a challenging picture, but understanding the trends and taking proactive steps can help you navigate these uncertain times. So, whether it's cutting costs, saving more, or investing wisely, there are ways to stay ahead of inflation and secure your financial future.